Hey folks, top of the day to you. Today I want to talk about something that's near and dear to my heart, and that's capital markets. And so I thought it made sense to talk a little bit about how capital markets work and function within commercial real estate. So let's start with something that everybody's familiar with: going and getting a car loan, right? And one of my favorite questions is it your money? And the bottom line is, when you're getting a loan, no matter what it's for, it's never anybody's money, right? I mean, if you go to Wells Fargo or Bank of America or, fill in the blank, and you go get a car loan, it's not Wells Fargo's money. It's depositors' money lent out at 10 to 12x, which is why you're getting, 1 to 3% interest rates on automobiles. It's a depreciable asset. So that's the first thing. And then you get into real estate, right? You've got residential and you have commercial. On the residential side, a lot of folks are familiar with it. That's how you go and buy a house, and you can go to Wells Fargo, Bank of America, or to a mortgage broker and get a loan, or even credit union for that matter. And it's a really efficient market. And the reason it's efficient is, at the end of the month, no matter who you went through, there's a government clearinghouse for that, right? VA loans, FHA loans, Fannie, Freddie, etc. And so it's a really efficient market. So move that off to the side, and now let's talk about commercial real estate. And commercial real estate normally is a very fragmented market, right? If you go to a bank and try to get a loan, very difficult on the commercial side, and which is why there's private lending and private money. And so let's break down private money into several categories. You have family offices, which are normally ultra wealthy individuals or a group of ultra wealthy individuals where their money is being managed by generally an advisor within that firm. And there's literally thousands of family offices within this country. Then you have REITs, you have insurance companies, right? If you go and buy insurance for your car, life insurance, etc., they have to get a return on the money, so then they can pay out on the life insurance, or cars if there was a wreck or something like that. And then there's securitizations, and within securitizations you have lenders that could aggregate and come together, and you go to Wall Street and you lever that money, and depending on the way you do your securitization, let's say you put $400 million out on the street, and then you wanted to securitize that. Generally speaking, that firm or that aggregator would leave 5 to 10% into the piece, which would be the first loss piece, and then the other 90 or 95% would be Wall Street money. And so that's how private lending works. And as you can see, it's a very fragmented market, and which is why you need someone like me who understands and works with these folks on a daily basis, trying to get folks loans approved. So hopefully that makes some sense, and hopefully that clarifies in your mind, commercial real estate and why it's such a fragmented market, and understanding that. And then even with COVID, it's even more fragmented. So, give me a call if there's something that I can help you with. Reach out on my website. You can go to gdl-capital.com, learn more about us and what we do, and then feel free to shoot me an email, eric@gdl-capital.com, or you can always just give me a call, which is 512-413-1707. Happy to have a consultation and see if there's something I can be helpful on. Today, what I recommend today? You know what? Watched a documentary on Netflix last night about Pixar, and I thought it was amazing. If you don't know the story about Pixar and how they came together, really kind of an interesting story, and the different people that came in at the right time to make the whole company, and really that whole genre of entertainment that we have now, how that all came to fold. So if that's interests you, check it out on Netflix. Have a wonderful day, and we'll see you next week. Thanks, folks. Bye-bye.